Golden Rule Radio is brought to you by McIlvaney ICA. ICA has been America's foremost precious metals brokerage firm since 1972, helping you build a strategic precious metals portfolio. Call 800-525-9556 to buy gold, silver, platinum, or palladium today, or go to McIlvaney.com. Welcome back to Golden Rule Radio, your usually weekly recap of the precious metals markets. We did miss last week because of the Thanksgiving holiday, so we've got a lot to talk about because a lot has transpired. The metals did not take a holiday. They've actually gone for a roller coaster ride. We are seeing gold down 5% in the 2 weeks since we recorded last. Silver down 11%. What that has led to is a spike in the gold to silver ratio all the way back up to 80-1, which is the high for the year. So with those underhand soft tosses, I'm going to throw it to you, Miles, and let's walk through what's happened chart-wise over the last couple of weeks.
Yeah, you're absolutely right, Tori. I mean, the commodities definitely took a hit, and I know David and Kevin talked a fair bit about this and the inflation rate and some of the things we're seeing in the commodity industry as a whole, not just the precious metals, but copper and really everything but
oil.
Natural gas.
Look at oil.
And nickel and tin and aluminum and everything else. Everything but natural gas, which makes sense because 'tis the season to run the heater, I guess is the best way to put it. But let's also not forget that the Dow Jones is down 6.8% and the U.S. dollar went down a point. So a couple weeks ago, we were singing the song of everything is fine because everything's going up. Remember when the Dow was up and gold was up and the transports were up and copper was up and oil was up and the dollar was up and everything was up in the same week? That never makes sense to anybody. Well, this week it's the exact opposite. Everything's down. So we had to play catch up. What goes up must come down, and apparently if everything goes up, then everything must come back down. But the dollar holding relatively strong, and I still think the dollar has a little bit of upwards momentum to go. And on the flip side of that, and because of that, looking at how strong gold has been over the last couple of years until this correction period that we've been in for the last year. And then, of course, how ridiculously overpriced the Dow Jones has been in terms of things like Shiller PE ratios. The Dow is obviously due a correction period. So we'll see when the trends change, but so far the trends remain what the trends have been, right? The dollar is trending up short term, but certainly down in the long term. Gold is trending up in the long term, but has been in this sideways pattern with the other commodities, or at least the other precious metals, here for the last year.
Although, to a lesser extent, gold is acting like the money metal. There are a lot of other factors that go into the gold price that we've recapped on this show. Bond yields can affect it. Geopolitical instability can affect the gold price. Monetary policy, money supply, inflation, all of those things can. But you're watching the white metals get pulled down like the other industrial commodities do because of their industrial uses. So the ratio should be widening here between gold and the white metals. That 5% decline in gold pales in comparison to platinum's and silver's 11% decline. Again, nothing worth panicking over. I mean, you said don't get excited on the spike that we're going to see, which is exactly what played out. And don't get depressed when we see it pull back to some key support levels, which are you convinced that we've seen the low in any of these metals right now?
No, not by any means. I'm never convinced of anything that hasn't happened yet. So I've traded the markets long enough to know that none of us actually know anything. We're all just doing the best we can and playing the best odds we can. And sometimes you do a little bit better than others. So yeah, one of my mantras has been for a long time, the beatings will commence until morale improves, or in this case, the trend will continue until proven otherwise. And your short-term trend in gold remains down until we see a legitimate higher high.
Short-term trend. Please hear that, listener. That's the short term, not the intermediate or the long term.
Yeah, and I know you had me do this maybe 6 months ago, and maybe I should do it again real quick. And let's just show a long-term chart of gold and what the long-term 5-year rising price of gold looks like. And then we add the Fibonacci levels and we add some correction levels to this, and you see that even though it feels like gold may be down $300 off the top, you are at a very shallow correction point here in the $1,600, $1,700, $1,800 range on the precious metals when you're looking at these long multi-year trends. We're talking gold doubling in price or very close to doubling in price in a short period of time. For it to go up $1,000, $1,200 and come down $200 or $300 is almost nothing. to somebody who watches chart movements on a regular basis. So yes, I do take the short-term versus long-term trends relatively seriously when we're looking at how these prices are moving, because we know what the long-term trend is in the titanic money spending mechanism that is the Federal Reserve Bank.
Bingo. And that's what you have to take into account. Long-term trend too in currency depreciation. That's why gold, when this company started, was at $35 an ounce. Now it's at $1,780 an ounce. So that is the long-term inflationary trend. Chairman Jerome Powell of the Federal Reserve finally admits this week that we have to remove the term transitory from the discussion when talking about inflation. They're admitting now finally that there isn't a transitory inflationary pressure in the markets. They've got to deal with it on a long-term aggressive basis. Does that mean speeding up tapering? Probably. Does that mean raising interest rates sooner than the middle of 2022? Probably. So that can cause a little dollar boost, and it can cause gold to come down a little bit. That's what you want gold responding like in that type of a monetary discussion. The problem is that you need to see the actual proof of them doing that. Them saying it from a microphone at a podium just does not count. When they start to do it, then you'll start to see the truth in the pudding with whether or not gold is going to maintain that long-term trend.
I think they call that gaslighting, where you spend years saying the exact same thing that you never have any intention of doing. Now, the problem here is with interest rates, since we are a global market, eventually external sources are going to start to force our hand. It would be far more in our interest if we would choose to do that of our own volition and do it accordingly over a period of time, where we're both tapering back spending while increasing interest rates at the same time versus having our hand forced from that external source. Before we get too far into the weeds talking about the philosophy of inflation, we already covered that this week. So I'd highly recommend checking out yesterday's show, the McIlvaney Weekly Commentary, where Dave McIlvaney and Kevin Orrick had a much longer discussion on the inflation topic than Tori and I are going to have time to get into today, because we're here to look at some charts. So we did go ahead and mention gold. And real quick, before we push over to silver, I do want to point out in the very short-term gold, like gold just over the last quarter, as we've had this rebound, we did have what appeared to be a rising channel. We did break below that channel here in the last couple days. It is possible, if not likely, that you should see a little bit of a continuation down. We've got a long way to go before we hit that longer term floor at around 1680 on the gold price. But just be aware, you could see some downwards movement. There's a couple prices here I'll line up on the gold chart that we could see turn around and continue back up from there, because eventually, like I said a minute ago, trends tend to continue, and the long-term trend, the multi-year trend in gold of pushing it to bullish higher prices will continue. Eventually, we'll have that turning point somewhere in here. It's just a matter of when. Now, moving over to the silver price, silver being the more volatile metal, of course, has had a little bit more volatile of a reversal, but same general concept, sitting in this long-term trading range, anywhere from around 21 to 25 and a half here recently. Back down in the mid-22 range. It doesn't really matter if you're a physical silver buyer, because we all know real silver is anywhere from 28 to 35 bucks an ounce and continues to be so. If you're trying to pick up coins, all of our hope here is we're moving into next year and the mint starts putting out next year's coins. We're certainly hoping that alleviates some of the pressure on the American Eagle market, the Canadian Maple Leaf market. But in the meantime, I'd continue to expect to see those spreads remain within the silver market. And the silver also has a ways to go before pushing into lower territory as well. So look also for silver maybe to make a rebound here over the next couple of days, just based on the aggressiveness that it's come down.
May it be, and may you add to ounces if that's the instance. Again, I started the show by saying the ratio was at 80-1 as well. That favors adding to silver.
Right. And finally, platinum, very similar to silver. Platinum's reversal down was a little more obvious because you had this really compacting triangle pattern into a reversal. Elliott wave guys out there probably see a 5-point impulse in here, and then a reversal off of that is looking pretty good. So that type of reversal, just from a trading standpoint, I think is real pretty, with platinum now down to about 930. Your long-term 618 fib is sitting a little under 900. So that actually would be nice to see platinum maybe lose another 40, 50 bucks down to a really healthy reversal point on the long term, and that's probably going to stretch that ratio out a fair bit too, because the platinum to gold and even the platinum to silver ratio is still very enticing.
Your words are ringing in my ears. 2 weeks ago, we sat in the studio and you said, get ready, Tori. Platinum's probably coming down big time to the high 800s, and we were at 1,040. So thanks for jinxing our market, Miles.
Right. Well, sometimes those pattern traders just, when you draw it that pretty, it's got to come true.
Okay.
And then finally, my favorite pattern, which is the pattern of the Dow Jones accidentally falling off the edge of a table. I call it the fell off the table pattern. I just made that one up, so we'll see if we can trademark that later. But that's the Dow going from 36.5 all the way down to 34. Not put in a lower low. I know it looks like a big drop. It's like a 6.5% decline since the beginning of November. We haven't put in a major lower low. Nothing in the equities market looks bearish to me until we're another couple thousand points down. And even then, we'd probably have to set in another stair step, maybe sub 30,000. So the Dow still sits in a very bullish position off a correction here. I don't know if I'd call this an entry level personally, because I don't trade when the Shiller PE ratio is this stinking high. But I do like seeing this kind of movement in the Dow markets, and we'll just have to see how this plays out over the next couple weeks.
So keep in mind that one of the metrics for determining a bear market is the 20% retracement from a high down to a pullback level of 80% of the previous value. So that would take the Dow, for example, to around 28,900 or just under 29,000. That's how far away we are from that metric being in force, with this being a bear market. A long ways to go.
Yeah, that is true, but I would also point out that with us down this much since November, it is possible you could see that type of decline in a very short period of time. Unlikely, you would assume in December. It's an end of year, so a lot of people are playing their Wall Street games to lock in earnings reports, numbers, as well as it being the biggest shopping month of the year. So the likelihood is small, but it's certainly possible.
The likelihood of gold and silver following suit and platinum are also very high. If you saw that type of a retracement in the equities markets before the end of the year and it happened that quickly, expect the metals prices to follow suit initially before reversing soon thereafter or right after the first of the year.
Yeah, and if you were to see that type of decline in the precious metals market, knowing what the long-term trends are over the next number of years and the discussion on inflation and government spending going forward, those are opportunities to back up the truck and load up on ounces. So that's going to do it this week for Golden Rule Radio. As always, we appreciate you stopping by. If you liked what you heard, hit the subscribe button, ring the bell, join us in the comments, ask some questions. We certainly will go through those as necessary. In the meantime, we hope you all have a wonderful week leading into December. If you'd like more info, you can find us on Twitter at ICA Gold. We're also on Facebook at McElvaney Financial, or our website, McElvaney.com. And as always, if you'd like to talk to Tori, myself, or any of the other advisors here at McElvaney ICA, we can be reached at 800-525-9556.
Thank you again for listening. Have a great week.